Good morning and welcome to Aroa Biosurgery's December quarter investor webinar. Today with us we have CEO Brian Ward and CFO James Agnew. Following the brief overview of the quarterly provided by Brian, we'll take Q&A which you can submit via the Q&A button at the bottom of the screen. I'll now hand it over to Brian. Thanks very much.
Great, thank you Simon, and thank you to everyone for joining. It's a brief update based on our 4C commentary. We put out the release this morning and it should all be reasonably self-explanatory. So just from a cash flow perspective, cash outflow $0.8 million, so low burn in the last quarter. Cash flow into investing activities, $1.4 million. That represents the investment into our manufacturing facility. That's proceeded very well. The facility construction is now complete and we're now into commissioning. We expect that to be commissioned at the end of this quarter. We've got a strong cash balance, almost $63 million. So in a very strong position there, no debt. From a guidance perspective, we reaffirm our guidance at $34 to $37 million. We've had a very good quarter from a revenue perspective, very strong demand plan going into the last quarter, operating at full capacity from a manufacturing perspective. So we expect to be towards the top end of guidance. The only caveat being any impact by Omicron on manufacturing. Not something that we expect. We've operated for 2 years now with no impact to manufacturing. Everyone is in full PPE, lots of measures in place, and we're escalating those measures by dividing up our workforce even further, increasing some of the mitigations that we have in place. So, we fully expect to deliver on a very strong fourth quarter and come in with a very good result for the full year. Just in terms of operational highlights, continue to expand the sales team. We're now up to 28 direct field sales representatives and very pleased with how things are rolling out there despite the headwinds that we're seeing with COVID-19. From a clinical study perspective, 2 key studies are now underway. So we have our Myriad registry study, a 300-patient 3-year study which has been initiated. And we've also begun enrolling for our Symphony pilot study, which will run over the next 3 or 4 months. So from an operational perspective, certainly hit the milestones that we were looking to hit over the last quarter and in a very good position, setting ourselves up for a good coming 12 months. So Simon, I'm going to pause there and pass it back to you for questions.
Great, thanks Brian. First question's from Shane Story at Wilson's. Good morning. Are you able to describe the market access situation that faces your direct sales team in the wound care and inpatient settings right now in the US? Anything you can share on how those key product settings are operating in early 22 would be useful in estimating the growth rates you might take into the balance of this year.
Yeah, so what we're seing, there's sort of a number of different things going on. We're seeing good account conversion from our team. So, they've now at 46 active accounts. So that's we're increasing access there, taking a little bit of time to set up in some of these accounts. But we're certainly seeing that the evaluations that we're doing, the value committee assessments that we're going through, we're having good results. So, there are headwinds, but despite those headwinds, having a good degree of success. I think the critical thing is, now having 46 accounts set up, we've got a very strong foundation to build from. And I think within those 46 accounts, there's a lot of immediate potential. So, that's the thing that kind of excites us about the next 6 to 12 months.
Thanks, Brian. Follow-up question from Shane. It sounds like Myriad is winning market share and focusing on larger surgical cases. Does that agree with what you're seeing in the sales data? If you can offer anything to help us understand the relative growth rates between sheets and more cells, it will help with our gross margin forecast. Thanks.
Yeah, it's early days, but certainly, we're seeing strong interest in morsels, and certainly morsels is at least 50% of of the sales mix from a value perspective. Yeah, I mean, we're certainly seeing good traction with Myriad. As I said, there is a little bit of taking a little bit of time to set these accounts up, but certainly sort of starting to see some good pull through, and also seeing some. What's been interesting is the value of some of these cases that we're doing. So we're seeing quite an uptick in the value of some of these cases, and particularly large trauma cases. Where the value can be tens of thousands of dollars. So yeah, seeing some really good signals there with Myriad.
Thanks. Question from Elise Shapiro at Canaccord. Any detail on number of new sites added for Myriad and on the revenue split, Tela, Aroa, and Aroa, the Myriad impact? Thanks.
Yeah, new sites. So we're up to 46 sites, up from 40 in the last quarter. I'll pass the sales mix question across to James.
Look, in terms of the sales mix, I mean, what we're sort of seeing is that it's a similar sort of split between what it was in the half year. It's sort of 60-40. It may sort of adjust slightly a bit more to the Myriad, the non-Tela business in the fourth quarter, but we're sort of expecting it to be around that close to that 60-40, 60% Tela, 40% the Aroa direct.
Great, thanks, James. Follow-up question from Elise, just on the sales team, any changes to Salesforce hiring plans, timing, or number of reps?
Yeah, we're now up at 28 reps, so we're continuing to recruit reps, and that's going to be ongoing. And I think there's an important consideration there. We're not just adding reps into new territories, we're adding reps into territories where we already have access into hospitals. And so, with 46 accounts, we can't serve that well enough in the short term with the reps that we've got. So, we're continuing to build that out. So, we feel we're getting these reps, giving these reps the ability to succeed quicker. So, that's something that we'll be looking for over the next 6 to 12 months.
Great, thanks. Another question from Elise. Are you able to share how many hospitals Myriad is in value assessment committees for, and any progress with additional GPOs?
Yeah, look, in terms of value assessments, I mean, it's at it's probably up at 100 or so. So, we're in a lot of value assessments at the moment. The key for our team is focusing on the hospitals where we now have access. From a GPO perspective, we have all of the access for GPOs that we need at the moment. So we have Vizient, we have Health Trust, we have Ascension. So we're very well set up from a GPO perspective. And we will add additional GPOs as those contracts come up, but that's certainly not a constraint at the moment to growing sales.
Great, thanks. Just a question, does this announcement and its maintained revenue target reflect the current Omicron surge in the US? This surge affect elective surgeries in January 2022, I assume?
Yeah, absolutely. Look, we're looking at at our guidance in terms of the current situation now and what we predict will happen over the next 2 months. And we're confident with the demand that we have coming through that we're going to be towards the top end. I mean, as I say, the only caveat being there if there's some challenges around managing Omicron, but I think our track record there is very good.
Great, thanks, Brian. That concludes the Q&A segment. I might just hand it back to you for closing remarks.
Look, thanks to everybody for joining. I think the team here has done a fantastic job over the last quarter, managing our way through the current situation. We're thrilled with where we are in terms of tracking towards the year end. Feel like we're very well set up going into the next financial year.
Great, thanks, Brian. Thanks, James. Thanks all for joining.